Meet Mohit Goyal. Mohit Goyal is the founder of a company called as Freedom 251. Under this banner, this company promised to launch the cheapest smartphone in the world only at a cost of 251 rupees. I will repeat, 251 rupees. The demand was so high that the company received 30,000 units of order on the first day itself and their servers crashed. Eventually, the company crashed too, and this particular management was unable to fulfill the orders that they have received. It turned out to be a big Ponzi scheme. The person cheated and whatnot. A lot of FIRs were filed. But the moral of the story is that by spending 0 rupees, absolutely 0 rupees, Mohit Goyal was able to become the talk of the nation. That's a bad story, and I do not encourage all of you to follow this example, but you can follow a legal example too that I'm going to speak. Now, this example is of my friend who is a startup founder. He started his company in 2015, and by 2018, he had to shut down this startup. But along the way, he was able to buy a very nice car. He was able to buy a very good house. Many of his employees were able to become rich too. Now, how exactly? Because they were able to raise money for their startup, and usse they used to withdraw salary. So the salary withdrawn was so high, they were able to generate wealth for themselves, and along the way, the company did not perform well. Now you'll say, "Acha, ye to mangalam story hui, Akshat, that you are speaking about." No, just look around. There are many unicorn founders also who run startups which are running into crores and crores of losses, but their personal wealth is growing. I'm not trying to criticize them. I'm just trying to tell you that all of this is perfectly legal. You can also explore such a route if possible, if it makes sense to you. The interruption, I'll just take 30 seconds. So working with a startup or doing startup oriented jobs, it's a very risky strategy. Kabhi bhi firing ho sakti hai. A lot of people end up getting fired from the job. So it's very important to safeguard yourself. And one way of safeguarding yourself is to buy a health and a term insurance. These days, the cost of insurance premium is rising like anything. It's one of the highest inflation assets right now. It is growing at roughly 14% inflation rate. So in that context, definitely do go and buy a health and a term insurance from our partners of today's video, which is Ditto. It is an excellent insurance buying platform. There is no pressure of buying. You can simply schedule a phone call, free phone call, speak with the insurance expert and get clarity what type of insurance you would need. You can use the links in the description and comment box to schedule a free phone call. And with that said, let's move over to the main video. So on this video, the larger topic that I'm going to discuss is that how you can become rich by investing close to 0 rupees. Or with zero investments. So let's kickstart the video, and there are 6 strategies that I'm going to speak about. So strategy number 1 is that you work for sweat equity. Now what is the meaning of sweat equity? So सबसे पहले आपको equity समझनी पड़ेगी. So many of us have jobs. We work with a corporation or we work with startups, and बीच में bunch of other businesses are there. So at a corporation or at a startup, there is something called as sweat equity that is offered to employees, especially at the early stages. So let me pick my own example. So I run a company called as Wisdom Hatch. We run stock market courses. We run investment oriented subjects. We run courses that have to do with money. We have been appreciated by our students. So you can check it out. That will help us because it's very difficult for startup founders to scale their venture beyond a point because there is always money constraint. So for me as a startup founder also, there are a lot of capital constraint. So usually karte kya hai? That we go and raise money. Now I am bootstrapping my company. Bootstrapping means that I am using my own money to run this venture. So that is called as bootstrapped startups. Now the thing is that in order to scale this startup, I need a lot of employees. Now I have limited money. So what can I do? So I can come out with a deal where I say that, hey, you come with me, work with me, and I will offer you an equity percentage. For example, I will offer you 0.5% of equity to work with me for every single year. And we will do a 3-year deal. Ki year 1 mein 0.5% equity will get unlocked. Second year mein another 0.5% will get unlocked. Third year mein another 0.5% will get unlocked. So you work with me for 3 years, you help me scale this venture, and because you are sweating, you are putting in your labor, effort, so much stuff, I am paying you this in equity. Usually अब आप बोलोगे कि यार ऐसा थोड़ी होता है, I need like salary also. So usual deal that is done by startups or by corporation is that a bit of your money is paid in cash, that okay, your salary is let's say 50,000 plus there is an equity play that will come in, and that is called as sweat equity. Now this is something that you can definitely consider, and a lot of people in India have gone on to become really rich, not because of the salary that they are withdrawing from their corporate job or from their startup, but because of the fact that they did a very good sweat equity deal. Now, before jumping into the key points that you must remember about sweat equity, just a very humble request that please like these type of videos. It will indicate to me कि आप मेरे को ऐसे topics भी बनवाना चाहोगे that I should continue to make these type of videos. It will make people fundamentally more aware. I try to explain really complicated business, finance related topics in simple language. So if you enjoyed this conversation, please press the like button. So okay, so what are some of the key points that you must remember in terms of taking a sweat equity deal? Now, primarily, there are three things that you must remember about sweat equity in case you have just decided to work with a startup or with a corporation. So the first thing is the percentage of shares that you own or the value of those shares. Sometimes you might get impressed that you are getting like 100,000 shares of a particular startup, but that absolute numbers might just mean that, okay, 100,000 shares might be like 0.1% of that company. So what is the value of this 0.1% is what you must be more concerned about, and to what extent it can grow in the future, because the 100% of zero is still zero, right? So there is no point in owning a company that is worthless. So the common sensical सा point है that you must not own such a company जिसमें you do not see any prospects. So don't negotiate for an equity deal with a startup where you yourself do not find the growth prospects. Common sensical सी बात है. But more important point is that please be cognizant of the total value of shares that you might be getting. Just by 100,000, don't get impressed. That is the central message. Second key point is that you must be aware of the type of stocks that you are going to get. So there are multiple types of offers that you might be given by a startup founder, and you will get inundated because you might just be starting out of college and you might not have any clue that, okay, preferred stocks क्या होते हैं, restrictive stocks क्या होते हैं, and all that stuff. So you will get confused and you'll say, अच्छा ठीक है, right? You'll just agree to it. Please read it up. Please talk to someone who understands this space. Please understand the type of stock that you are going to get. So let me give you a couple of examples here. Now, two very common type of deals that are given are called as stock options or restrictive type of stocks that are given. Now, what are stock options? Stock options means that in 2023, right, you have joined a startup and in 2026, the value of that startup grows. So let's assume that it was at 100 rupees per share and the value of this 2026, that particular startup itself grew. So the stock value will also grow, right? So let's imagine it to be 1 lakh rupees, right? So that is per share value. Now, under stock options, what ends up happening is that you are given an option to purchase the stock of that particular startup at a subsequent time. For example, you joined the startup in 2023 and your stock option says that you can execute this option or purchase the stock of this particular company at, let's say, 500 rupees till the time 2025. So in 2025, you take a look कि अच्छा यार, the startup is doing fairly well, revenues are up, profits are up, good leadership, fundraising हो चुकी है, वगैरह वगैरह. So you're fairly confident, and what you would do is that you will execute this stock option at what price? At this 500 rupees, right? So that is the meaning of stock options. It just gives you a timeline as to go back in time and purchase it at a lower valuation. So that is the inherent nature of a stock option. Now, restrictive stocks on the other end convert at a predefined value as per whatever the initial deal is. But please understand the exact contract, exact nature of this. Now, I'm not trying to complicate this. I'm trying to help you understand the overarching viewpoint, but please investigate this further. Now comes the third most important point here is that आपने stock options ले तो लिए वगैरह वगैरह, but how will the liquidation work? So let me explain it via my own example. So I had invested in a startup. Now I wanted to take an exit from that startup. They were very kind to give me an exit from that startup. So that process of me buying equity in, let's say, 2022 कि मैंने 5 लाख डाले, then in 2023 it gave me an exit. Exit means that they gave me a liquidation option. Now I am an angel investor. Now if you are joining a startup or a corporate, please understand your vesting period. ऐसा नहीं हो कि the vesting period starts after 15 years, 20 years, right? So that becomes too long a time for you to commit. So please understand how exactly your equity will be liquidated. At what stage will it be liquidated? Will it be liquidated in a private market, public market? So all those are basic points that you must study further. But nevertheless, owning some equity in some startup or at a corporate job is a great way of building your wealth. It comes with zero investment from your side, except for the investment of time, of course, but zero investment of money. So with that said, let's move on to option number 2, which is to build zero cost or near zero cost businesses. Now, what are zero cost businesses? So these are the type of businesses that I have been focused in terms of building. For example, I created an admissions consulting firm called as My MBA Journey. मेरे पास पैसे नहीं थे, so it's not as if that I could put lakhs and lakhs. I just went on Wix.com and I created my own website, खुद ही design कर ली थी, and I bought a domain name. So the investment was close to zero, hardly $30-40 लगे होंगे, something like this. So not massive massive investment, very little investment, but a business was up and running. Similarly, I started writing on LinkedIn. I started shooting content on YouTube. So these are the type of businesses that I've executed. I created a company called as Cases Over Coffee, which again was a simple website, nothing fancy happening there. So on that note, do check out Wisdom Match, which is the current startup that I'm running. So the point that I'm trying to drive home is that there are multiple businesses that you could create where the investment amount or the initial investment amount is very low or close to zero. What are some examples? It could be YouTube, writing on social media, creating a website, creating a blog. So all these are internet based options where the amount of investment required from your end is very low to begin with. Now, what are some of the challenges that you will face? Well, challenge number one is that because the barrier to entry is very low, the competition is very high. Let me explain it by using the example of YouTube, that anyone can pick up a camera, mobile phone, start a YouTube channel. The cost of starting a YouTube channel is close to zero. But guess what percentage of YouTubers end up making money, which is more than 10,000 rupees a month? That is a simple question, and the person who answers this correctly will get a one-on-one phone call with me. I'll announce the result by next week. So to cut the long story short, that in these zero cost businesses, the competition or the level of competition is just insane. So that brings additional set of challenges. So challenge number two here is that how do you find that initial traction? So that is the key challenge that you will struggle with. What I would advise on this front is that start with something that you know. There is zero point in starting a business on which you have no insight. For example, if you understand construction industry, or if you understand how to do marketing, or if you understand how to do software development, please stick to your niche. That's a very easy decision for you to start your journey in something. Unless you have insights on a particular industry, you will not be able to sell that knowledge and get paying customers for it. So that is literally where the story starts. And then once you have figured out your niche, you have started creating some content or whatever business you want to start on that space, then comes the next challenge, which is scaling up that particular business. So that is an entirely different debate, different topic, probably a separate video on how to scale businesses. But here is a video that I've done on building 0 to 1 businesses. Will give you more insights as to how I am building my Airbnb business. It will give you more ideas ki marketing kya hoti hai, strategy kya hoti hai, and all that stuff. So please go and watch it. It will at least give you a head start. But in summary, there are multiple 0 to 1 businesses which require very little investment from your side. And if you are focused, smart, have a differentiating factor, have a little bit of knowledge, then getting the wheel moving is not that complicated and you can start your story from there. Okay, so the third way of getting rich from zero is very simple, that you borrow money from friends and family, and it's called as 3Fs: friends, family and fools. Why? Because honestly, when you are borrowing money from friends and family, most of the time you will not return that money, right? So that's the reason why that third term of fools have been added. But honestly, the family is there to support you, and there have been multiple instances where billionaires have been created through support of their family. A classic case in point is Mr. Narayan Murthy. Here is his fascinating story that in 1986, he borrowed 10,000 rupees from his wife and he was able to build Infosys into a multi-billion-dollar business. Now, the reason why I'm telling you this story is कि पहले दो points उनके first 2 points, you would say यार I don't even have 10,000 rupees. So you can always borrow it from friends, family and fools to get that head start in terms of building your website and whatever initial material or raw material you need. Now, just because you have heard of this video, don't just simply go to your family and start demanding like random amounts. Please understand these 3 sub points which are very important. First and foremost, your ask should be reasonable and you should go to your family with a plan. For example, don't just simply say yaar business start karna hai, give me like 1 lakh rupees. Your family might be nice and they might give you that money, no doubt, but be responsible. At least be clear about what you want to do next. That is literally step 1. So do little bit of research, be specific about what specific idea you want to start. Again, go back to that step that I was previously discussing. Be clear about your 0 to 1, your area of expertise, your area of insights. So this is literally step 1 that you must be clear about, that go to your family with a plan, with a reasonable ask. Don't just simply go and say that, you know what, give me like X amount of rupees. Be reasonable in terms of asking. Number 2, please communicate with them from time to time, especially if you're borrowing money from your cousins or extended family. They might be wanting कि यार इसको startup के लिए पैसे दे दिए थे, देखे नहीं वो पैसे उड़ गए. So that should not be the thing that it spoils your relationship with your family. Be clear, tell them, give them a monthly update or every 3-4 months update of whatever update you want to give. Be very clear about it. Many a times in family, we we take things personally, we don't do things professionally. You have borrowed that money for a professional endeavor. So be very clear in terms of exhibiting a professional demeanor. It's very, very important, critical that you communicate with your family members whom you have borrowed money from in a professional manner and give them timely updates. Third and finally, be very clear in terms of setting out the expectations and explaining the risk. Almost 90-95% of startups will fail. Most likely your first startup is going to fail. That happens with most of us. So from that perspective, if you're borrowing money for the first time from your family, please tell them that, see, 99% I'm going to fail. So set the expectation realistically, and your family is there to support you. So it's a semi-professional, personal type of a relationship. So on that note, be very clear. If you explain them the risk, they probably might not mind losing that money. I don't know. That really depends on the type of family you are in. But yeah, I hope you got the overarching viewpoint that in case you're borrowing money from your family, these are some of the key points that you must remember. So then comes the fourth way of going from zero to a millionaire, and that is called as slightly more professional way of raising money. And there are essentially three options here. One is that you can do something called as crowdfunding. You can go to a VC, and third is that you can go to an angel investor. Now, what are the primary differences between these 3 points, and what are some of the subset or sub points that you must remember? Let me quickly discuss that. So if you are a startup founder looking to raise some money, then you will essentially have 3-4 key options here in terms of professional help. So one is that you can go to a crowdfunding platform. Crowdfunding क्या थी? जैसे Freedom 251 example that I was speaking about earlier, that was a crowdfunding effort. Basically, the owner, what he simply said was that, hey, you know what, 6 months from now or 1 year from now, I'm going to give you this phone. But meanwhile, give me like 251 rupees to pre-book, right? So what are you doing? You are essentially taking a loan, a product-based loan where you have clearly shown a product that this is what the mobile phone might look like, and you have taken money from other people. Now, this is one of the ways of crowdfunding, and essentially, if we strip everything, well, it could be a type of a loan or a pre-order that you are taking from the public itself. So this is done at a product level. Now, second is that you can also offer equity. For example, there are fundraisers that happen that, hey, I'm looking to raise $100,000 for my startup, and this is the type of product that I'm going to build. And the equity that I'm going to offer for this $100,000 is 10%, let's say. So public will come, public will start funding. So for example, let's say that some rich guy sees this, likes the product, like the business idea, then what would he or she do? They will just simply go and invest like $100,000 and will get 10% equity in that particular startup. Now, there are a lot of websites in India that help you in terms of doing that. I will not name them. You guys can figure it out which those websites are. Just simply Google crowdfunding India and you will get a range of websites. Please do your due diligence. I don't want to endorse anyone. So, okay. Anyways, point number 2 is that you can go and pick something called as angel investing. Now, what is the meaning of angel investing? Well, angel investing is done by individuals per se. For example, I do a lot of angel investing. I invest in a ticket size of 5 lakh to 10 lakh in every startup that I am looking to invest in. I mostly invest in certain types of startups. For example, fintech, edtech type of startups. I want those startups to be cash flow positive. So I have certain criteria, and many entrepreneurs come and pitch to me. They usually reach out to me via LinkedIn. They will send a very nice pitch, very quick pitch about their business. If I like it, I schedule further meetings and then we get on a call and figure out the strategic fit. This is very, very important if you're going to an angel. For example, if the only thing that I bring to your startup is money, it's pretty much pointless to take my help. But if you feel that I can help you in some other way, कि यार अक्षत को finance आती है, right? Then probably he can help us fine tune our product. Then it makes sense to take my strategic help on it. So any angel that you pick, please remember that in terms of every other thing, the working style, bunch of other points, you need to understand the strategic fit with the type of person you are and the type of product that you are looking to launch. Then comes the third option, which is called as VC funding. Now, VC are institutions in a way. For example, many of us see Shark Tank. Now, is that an angel funding or a VC funding? Let me know in the description box. But some of India's primary VC or leading VCs would be something like Sequoia Capital. Now, what do? They offer more portfolio support. For example, let's say that you are building a fintech product. Now, Sequoia Capital might have 5 companies in the fintech space that they would have already invested in. in. So they can connect you to this founder, they can connect you to this founder, they can connect you to this founder, they can connect you to all these different founders. You can figure out, work together and come up with a better product or take each other's help. So this portfolio level of support is also quite there when it comes to VCs. Now, what is the primary difference in terms of crowdfunding, angel and VC if you're approaching them? See, with crowdfunding, you need an idea that clicks. Your idea needs to be super simple, जो public को समझ में आ जाए, right? So therefore it is called as crowdfunding, okay? When it comes to angel, you need to look for strategic fit. For example, if you come to me and you start speaking about like infrastructure, oil-based company that you're trying to start, pretty much a really bad fit with me, I would not even look at that idea. So understanding the strategic fit is very, very important. When you're going to a VC, you need to be much more structured. Structured means that you need to have a pitch deck ready. What is a pitch deck? It's a business plan. Write it, understand it, have a very clear idea about your vision, create your Excel spreadsheets and whatnot. With me, you don't even need to do that. I don't believe in valuations and all that stuff. As long as the business is sensible, there are a set of criteria that I look at and I invest. So I hope that this gives you a sense that if you're looking to raise money or raise capital, these are your three options and what are some of the salient points that you must remember. So then comes the fifth point, that you can also scale up your startup by offering your time. Okay, and this is called as a strategic pitch from your end. Now, let us imagine a situation where you want to co-start a business with me, right? And you might not have a lot of capital, but you have a brilliant idea. You have a lot of time to devote to that startup. Now, you might say that, dekho, if I do it alone, I might not be able to raise capital. I might not be able to do all this stuff. Ki main crowdsourcing karu, I go to VCs, bunch of other different things. I might not be able to get my first 1,000 customers. I am a little bit iffy about the product at hand. So you need a little bit more hand holding. So what becomes your goal? It becomes to find strategic partners. So in those situations, what you do is that you reach out to strategic partners. For example, you might see my profile on LinkedIn. You might like it. You might say that, okay, this is the type of co-founder or partner I want to work with. Then you reach out to them, you fine tune your idea, you be absolutely clear what you bring to the table, what the other partner brings to the table, and then you co-start your business. Now here, the primary tips that I will give you is that number one, you must have already done your research before you pitch to a partner, especially if you feel that that partner is bringing more value. Point number two, you must strive to figure out a fair deal. In such type of dealings, the expectation is that there are two partners. I will have 50%, the other person might have 50%. Now, if you reach out to Elon Musk and then Elon Musk says that, okay, theek hai, let's become business partners. Now, will you expect like a 50-50 equity split? The short answer is no. He's bringing much more value to the table than you. So from that particular perspective, have a fair sense of what a fair value of equity split should be at the beginning. Probably in my case, I'll be happy to pick 1% equity and Elon can keep 99%. So you have to figure out that the person that you're reaching out to, what would be the right equity split, and you should be able to rationalize it, right? The other person, because if you are debating between two people, yaar, meri 50 honi chahiye, meri 50 honi chahiye, then it becomes like a nightmare scenario. You will not even be able to start a business. So be very, very clear about it. Have a basic sense. Do your basic research on this. Now, third and final point is that your value add should be very clear. Now, what is the meaning of value add? For example, if you're reaching out to person B, in my case, I reached out to Elon. Now, Elon brings technology power. He brings like marketing power. He brings like so many different experiences, vagera, vagera. I need to be clear what is it that I'm bringing to the table. For example, I can say that Elon, you are running like 100 different companies. You have hardly any time for this focused way of approaching this business. I will do it. Give me like 1% equity. So that seems like a fair deal. Similarly, you must be very, very clear as to the value add that you're bringing to the table. So then comes the final option of going from 0 to a million. What is it that you can do? You can literally borrow money. And most of the times you can't borrow money willy-nilly just to start a business. You need some kind of collateralized loan. So if you have some other property that is there that you can put as a collateral, then you can raise money, reinvest it, build something capital oriented. Now, one of the classic things that people are doing is that they are building Airbnb business, and this is a model that I will also experiment. यहाँ पे मैं आपको मैथ समझा देता हूँ that let's imagine that I already have 3 properties and I have 0 loans on me, right? Now I can put this as a collateral because this is a mortgaged asset, so to say, right? And let's say that my loan limit on 3 houses becomes like 5 CR. Now this is borrowed capital. This is not my capital per se. I can pick up this 5 CR and what will be my EMI? Now roughly if I'm getting a loan at let's say 10%, 11%, then roughly I'm paying 5 to 6 lakhs a month. Now my goal becomes that I pick this 5 CR of capital and invest it in such a way that I'm able to generate a cash flow flow that is able to pay my EMI or close to my EMI. So what can I do with this 5 CR? Now I can do a bunch of things. For example, I can start an Airbnb अगर उसमें मेरे को फायदा हो रहा है. I can start a business वगैरह वगैरह. Now Robert Kiyosaki is someone who is an expert at this game and he has done it at a massive scale and he has become a billionaire by using this model. Now what are some of the key things that you must remember? Number one, please don't get over leveraged. कि आपको तो ये idea बहुत अच्छा लगा, right? 5 CR of capital. I will start trading in stock. This, that. By a lot of people have gone bankrupt. Please play this game within your limits. Extremely critical. This is point one. Don't be over leveraged. Point B, you should explore ideas which are very quick to generate cash flows. If you get this 5 CR of capital, then you're thinking कि चलो यार अब कोई business शुरू करते हैं and the business tanks, then you're unable to pivot that business into something. It becomes a problem. So you must have a very clear idea with a good probability of success. Point number 3 is that you must have a plan B, plan C when you are playing such a high risky game. Many builders you might have seen around you, they play exactly the same game and they go bankrupt क्योंकि एक दो deals खराब जाती हैं and that is how the entire business falls. That some of them used to be millionaires and then they over leveraged it, बर्बाद हो गए, right? So from that perspective, please remember these 3 points and you will do fairly well. I hope you enjoyed this conversation, you learned something new, and if you did, do press the like button and I'll see you soon.